The TTF and NBP front month and front season products are caught within clearly defined sideways ranges. And we ended last week in the middle of those sideways ranges. Hi, my name is Marcello Kolax. I'm the managing director at Clever Markets. And today I'm walking you through the European energy charts. As always, nothing you see here actually constitutes trading advice. It is just my humble opinions and, of course, not an invitation to trading. So at the start of this week, we are confronted with this TTF sentiment poll, and we can see that the bulls and the bears are reasonably balanced. So we've got the bears at 37% and we've got the bulls at 40%. So this indecision or this even split is perfectly reflected us being in the middle of this sideways range with no strong preference. So right now, I personally don't have a strong preference which way the market could go. But yes, we do start the week with the bearish inclination. I'm not 100% convinced of that. Here we have a quick snapshot of the Clever Markets dashboard that our clients are getting this morning. And you could see that our bullish stance on the hourly charts has now reverted. Only the NBP front month is already bearish because we broke past an important support level. All the others, TTF front month, TTF front season, and NBP front season, they are neutral because right now there's no clear preference. Within the rectangle, we are neutral, of course. Don't be confused by the German power and EUA markets. Yes, we are still assessing them as being bullish in line with the Clever Markets methodology because these arrows here, they are not forecasts. They're simply telling us what the market is currently doing. And until we do get a clear break below these ranges, that we'll show you in a second, we remain bullish. So if you're a physical trader who's looking to buy below the reference price consistently, then systematic trading might be the right choice for you. European energy markets have changed. There is no going back. The physical traders and procurement teams that we work with, they upgrade their existing fundamental models with technical triggers to get the best possible price, even if we are in an uptrend or in a sideways trend. So if you tried TA before, but it didn't really stick, then Clever Markets is the right choice for you. Send me a DM. And now back to the charts. So let's get started with the TTF front month daily chart. What we're seeing here, zooming out, is this sideways range between 31 and 33.44. And that has been in place since the 28th of August. And we have been swinging within that. And you can see within that range, that is the middle that I'm talking about right now. These three small bodied candles are showing me that the bulls failed to push higher after this initial bounce that we saw with this piercing line candle pattern last week. So the bulls aren't fully convinced. They're not pushing through. Right now, I am indecisive and I don't have a preferred outlook. So for that, we are looking at the hourly chart. Just one more thing. As we are within these ranges and in the middle of these ranges, most tools stop working. So I don't want anyone to use the MACD right now. The moving averages are kind of useless, and even the usually reliable stochastic is not really helping us right now on the daily chart. So on the daily chart, honestly, we can only wait for a break past the range to get started with a bigger momentum trade. But within that range, there's not much to be had. So let's have a look at what happened here, right? So this here was the bounce off the support area, as you can see here, right? So this thing here is this down there. So after the bounce, we did get a smaller correction on the 17th of October, which was perfectly fine. So at this point in time, we are still thinking, hey, just a corrective move in an underlying uptrend. And that's exactly what happened. We did find support at the 61.8% fib retracement. And back then, we were still inclined for bullishness. Why was that? Because momentum tools and trend tools, the MACD and the moving averages, while we got this tiny bearish down leg, we are still just topping out. Yes, of course, we did get a stochastic signal that was bearish, and this combination, bullish trend and momentum tools coupled with a bearish stochastic, is giving us a signal for a smaller corrective move in an underlying uptrend. And that was exactly accordance to textbook, as we have written in the Clever Markets Technical Analysis playbook here. There you go. This is available for my clients. If you want a snippet of this, do get in touch. So on page 82, we are in the section differentiating between corrections and reversals with the help of indicators. And scenario 3 is describing exactly what we had, right? We had a downside correction in an underlying uptrend where trend and momentum tools were aligned with the preceding trend, but then they started to flatten out as we are correcting lower, but we are never ever getting a real bearish signal, right? And by the way, here's what we write. Considerations for physical traders and for speculative traders. And that was exactly what's happening here, right? We did have an uptrend. Trend and momentum tools were pushing higher, and they were topping out a little bit as as the market started to move down. Nothing crazy here. We put in the Fibonacci retracement levels because we know that as long as we start finding support at the 61.8% Fib retracement, in our case 31.9, the market still has a chance at bouncing and simply continuing higher. And here's the problem. We did bounce, but the bulls didn't push through. So this completely changed our outlook because we are now making lower peaks and we declined back to the support level. So now we are looking at the trend and momentum tools and we saw, bearish crossover on the MACD. Ooh, bearish crossover on the moving averages. We start seeing higher volume on the down leg. So all these things make it more likely that the market could decline from here. And can you see that's the beauty of TA? We are not married to our ideas and we are perfectly happy to adjust our opinions. And that's exactly what smart people do, right? When we are faced with new evidence that contradicts the previous assessment, when we simply adjust our view of the market. And that's what's happening right now. So why am I still split? Well, I'm still not bearish because we're still not making lower lows and lower highs. What I want to see is a clearer break below the 61.8% Fib retracement at 31.9, and then I would be rather bearish. 31.39 would be the immediate target. Below that, 31.11. But can you see from the daily chart, we see that we don't have much room to go either way because we have the support here and the resistance there. So this here might be a very, very short-term play for some intraday traders this morning. But please don't get rattled by any sort of higher volatility this morning between 31.9 and 32.37. At the start of this week, it looks to me like the markets could move lower a little bit more. And once we arrived at those support areas, it's really important to keep an eye on the lower level charts, like the hourly and the 15-minute chart, to see if we are going to break down or if we are just going to bounce. For speculative traders, if we are bouncing, this might be a very interesting entry opportunity. If we break lower, however, momentum traders might enter the market. For any physical traders out there, the support area might be some opportunity to buy on the cheap, but of course, it is not recommended to lock in all the volume in case we do break lower. German power and EUAs don't look like they could go much, much higher as of right now.